showing the time to be 2 o'clock Central Time. I'll call this meeting to order. It's the Audit and Finance Committee meeting of the Board of Trustees, Lone Star College System. It's being held in the Training and Development Center boardroom at the system office. First item is to call to order, which I've done. I'll do roll call. Trustee Ayers Wilson, are you present?
Yes, I'm here.
Thank you for joining us today, Trustee. Trustee David Vogt, are you present? Okay, we'll move to the Pledge of Allegiance. Lone Star College System Police Department officer will lead us in the pledge.
Pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you, officer. Next item on the agenda, certification of the posting of the Audit Finance Committee meeting. Desiree, could you confirm posting, and then also if we have any housekeeping items?
I certify that the meeting has been posted in accordance with the law, and all committee members who are joining us via Zoom, if you would please turn your cameras on to be counted as present. Thank you.
Thank you very much, Desiree. Next item is public comment. Has anyone signed up from the public to speak?
We have no public comment.
Thank you, Desiree. Next item, approval of the minutes of the May 27th, 2021 Audit and Finance Committee. Do I have a motion, or may I have a motion for approval of the minutes?
Did you hear me? I'm sorry, you kind of went muted. I'll make a motion that we approve minutes.
Okay, thank you. I'll second the motion. We have a motion, and a second. All in favor, say aye. Aye.
Aye.
Very much, Trustee Ayers Wilson. Appreciate the motion and the vote. Next item is review audited financial statements presented by independent auditors. And Jennifer, do I call up Weaver? Okay, Weaver, if you'll join us, please. And I'm going to ask you if it'd be okay if the trustees ask questions when they have them, or do you prefer that we
Absolutely.
save questions?
No, yeah, let's, whenever you have questions, just stop me and we'll address those as they arise.
Okay, sounds good. Trustee Ayers Wilson, did you hear that? You're free to ask or ask questions of the speaker anytime you want. We do not have to hold our questions.
Okay, I got it.
Thank you.
Right. Okay, so I think you have the presentation here in front of you. If not, I'll be flipping through the slides online here via Zoom. So just some quick introductions. My name is Greg Peterson. I'm the audit partner on this engagement. I have with me today Matt Rogers, who is the senior manager on the engagement. I'd like to just point out kind of the makeup of our overall audit team. So I am the engagement partner. Matt serves as the senior manager. Stephen Smith is the senior associate who did most of the substantive field work. Also involved in this project, we have Rima Paparelli, who is a partner in our IT and data analytics group who assists with this engagement. And we also have Elisa Gilbertson, who is the equivalent of a senior manager that also assists Rima in some of the data analytics that we do around this engagement. They also assist us with some of our audit procedures. And then Sarah Dempsey is the quality control reviewer on this engagement. So we'll just kind of do a quick overview of the audit process. So I want to point out on this slide kind of what the audit cycle actually looks like. So we start with actually planning the audit, which starts sometime around May to June. We start talking with the audit team about some risk, any changes in the environment that we may have that we want to adjust potential audit procedures for. So we start with the initial audit planning process. And then sometime around July, early August is when we start our interim fieldwork procedures. And then we come back in October, November, obviously good to go into December here with some of our final fieldwork testing that we're doing, as well as drafting and reviewing the financial statements, the single audit report. And then ultimately we'll issue the final report in December. And then subsequent to the issuance, have all of our exit conversations and discussions and prepare for the next audit season.
I have a question.
just
This
go
is
in-
trustee Aries Wilson. Are we gonna get a copy of this presentation?
Yes.
Okay, just wanted to check.
And this diving into the audit process in a little bit more detail. So we perform our audit in accordance with generally accepted auditing standards, as well as government auditing standards. We also perform our single audits in accordance with Texas Uniform Grant Management and uniform guidance. In addition to auditing the financial statements and the federal programs and state programs, we also do perform some compliance testing. So in that process, we will look at certain processes such as your procurement laws, your procurement and bidding process. We'll also evaluate your compliance with the Public Funds Investment Act. Our audit is based on a risk-based approach where we focus on specific risks. Part of identifying these risks would be to evaluate where we think there could be potential misstatements. So in that process, we look at your cash disbursements for payroll and non-payroll expenses. Just because it's such a large transaction cycle, we want to make sure that we're evaluating those controls to help us design our audit procedures that are associated with these cash disbursements. Also, when we're identifying risk, we look at improper revenue recognition. So those recognition criteria are a little bit trickier when it comes to federal state grant recognition. So we think those are more a higher area of susceptibility to misstatement. So we also design our audit procedures to address those risks. Now, when we're performing our audit, we don't just test the balances. We also evaluate your internal controls. So in addition to looking at the numbers, we want to evaluate the controls around what drives those numbers. So as I mentioned, we're going to test controls around that cash disbursement process, around your payroll process, around your bidding and procurement process. So the better we understand your internal controls, the better we understand your operations, and that helps us perform a more efficient and effective audit. As I mentioned earlier, we also do test compliance, and our audit is designed to obtain reasonable assurance regarding the financial statements of the college. Obviously, we don't test 100% of every single balance, so we can't provide absolute assurance. But our auditing standards only require us to obtain reasonable assurance that the financial statements are properly stated. So that's how we design our audit procedures. All right, well, now we'll get into the actual audit results and some required communications that we are required to make. So looking at the financial statements themselves, we do plan to issue an unmodified opinion on the financial statements. So that is the highest level of assurance that you can receive in an audit, is an unmodified opinion. Throughout the testing, we did not identify any control deficiencies over financial reporting, and we did not identify any non-compliance regarding financial reporting. As I mentioned earlier, we test the balances, but we also test your major federal and state programs. We will issue a report on your major federal programs, and we do plan to issue an unmodified opinion on your federal programs. The two programs that we tested were the financial aid, or the student financial assistant cluster, and the education stabilization fund, also known as HERF. So those are the two major programs that were identified for testing this year. Throughout that process, we did not identify any material weaknesses in internal controls. We did not identify any significant deficiencies, and we did not identify any non-compliance. I do want to mention that we are still in process of wrapping up the audit for the HERF grant, but we do not anticipate having or are aware of any findings as of this date. Next, we'll be issuing an opinion on the state awards, and we plan to issue an unmodified opinion over your major state award. The program that we tested was the Texas Education Opportunity Grant, so this is also known as the TEOG grant. Through this process, we did not identify any material weaknesses in internal controls over compliance. We did identify a significant deficiency in internal controls. which we will go over on the next slide. And then we didn't identify any non-compliance or unallowable cost associated with this grant. So in discussion of the significant deficiency that we identified with the TIAG grant, so what this is, it's regarding eligibility and the determination of whether we're awarding an initial year for TIAG or a renewal year for TIAG. So through our testing, we selected 40 people to test. 3 of our 40 students that we tested had attempted more than 30 hours and they were awarded initial TIAG. Well, the requirements of TIAG state that if you've attempted more than 30 hours of credit, then you can't receive the initial TIAG. So really what this boils down to is kind of a classification issue between whether we're awarding initial or renewal TIAG. However, we do look at this as a compliance issue, since the compliance requirements do state that any student who's attempted 30 hours cannot receive the initial award. And really, we decided to land on a significant deficiency because this deficiency does not cause any type of unallowable cost or question cost. The amount of award would have been the same to the students, whether they would have been an initial or a renewal year. It just comes down to the classification error. And what really kind of led to this error was the fact that this process is done manually, and with everyone working remote, it was done also remotely. So there are a couple of factors that led into this finding. And again, taking into all these factors and looking at it qualitatively, we felt that a significant deficiency addressed this finding versus a material weakness, which is much more of a severe finding. So we thought a significant deficiency was the appropriate way to communicate this deficiency. As part of our auditor communications, we are also required to look at the status of our prior year audit findings. So last year we did have a material weakness over financial reporting related to the OPEB plan restatement. We have followed up and looked at the calculations this year. Everything looks good. We can see that the balances are being properly amortized, and we do not anticipate this being a recurring finding for the current period. I also wanted to point out that the college did adopt a new accounting standard. This is GASB Statement 84 regarding fiduciary activities. So this statement establishes and it helps identify what qualifies as fiduciary. So this is basically whether, who's controlling these monies. Are we holding these monies as a fiduciary on behalf of someone else, or are we holding these monies and we're directing the use? So GASB 84 helps define what qualifies as fiduciary. And the actual adoption of this new accounting standard did not affect the college's financial statements. So there's no prior period effect to this adoption, and there's no change in the current presentation regarding the adoption of GASB 84. In addition, we look at management's estimates as part of our audit process. We found that management's estimates are reasonable based upon their evaluation of the key factors and assumptions. Some of the biggest estimates that we considered was a proportionate share of the net pension liability and related deferred inflows and outflows, the proportionate share of the OPEB plan and the related deferred inflows and outflows, depreciable lives of capital assets and the related depreciation expense, and allowances for doubtful accounts. And based on our review of those estimates, we deemed that they appear reasonable. When looking at the financial statement disclosures, we want to look at disclosures that have possible, that could be looked at as being very sensitive. The 3 that we identified here would be your Note 10 for your ERS plan, Note 12 regarding commitments and contingencies, and Note 20 being your post-employment benefit plan footnote. I'm actually going to turn it over to Matt now, who is going to discuss some of the past audit adjustments that we have.
Okay. Thank you. Any trustee Ayers Wilson, any questions for Greg before he steps away?
No, no questions. Thank you.
Okay, thank you. Matt, proceed, please. Thank you.
Hi, good afternoon. Again, my name is Matt Rogers. I'm the senior manager on the engagement. And I just wanted to cover the last few slides here. Under professional standards, we're also required to communicate any incorrect and misstatements. And I just wanted to point out first and foremost that these are misstatements that are not material to the financial statements, but may be over what we call trivial or de minimis threshold. And so we just communicate these just to indicate that that we did discuss these with management, and we both agree that these are not material. So the first two listed here are pertain to on behalf contributions. So the state contributes to the college's retiree health and pension plan. And this is essentially just the on behalf contributions that are grossed up and not removed from the financial statements. Previous to what's known as GASB 68 and GASB 75, which define reporting for pension and OPEB, you would record these on behalf expenditures and revenues, but subsequent to adopting those statements, you would be forced to remove these because of the measurement period associated with the pension OPEB plan, which is the year prior to the year of your financial statements. And so you'll also notice here also that it has no impact on your ending net position. So again, we consider these not to be material. The third one listed there is for some personal protective equipment that was donated to the college that was expensed rather than recorded as inventory at the end of the year. The fourth one listed there is an invoice for Harris, Q4 invoice for Harris County Public Library interlocal agreement. That's just recognizing the invoice in one period versus another. And so that is just an basically just impacts your beginning net position. On the next slide here, there's just three more listed here. One is for ERS contributions, accrued versus actually accrued versus what should have been accrued. Some deferred losses for some of the refunding bonds, revenue bonds that should have been written off in a previous year. And then the last one is just a projected misstatement. Whenever we do sampling over certain balances, if we identify a misstatement, we have to project that misstatement over the remaining population. This just to indicate that our projection was very immaterial. And so you'll see at the bottom of this slide, the actual difference as a percentage of the total financial statement caption total. So if you take into account total uncorrected misstatement against the total assets or total liabilities or total net position, you're actually 2% or less of the total. And so again, indicating that that would be not material. The last slide here, these are just some other communications that we're required to present to the board. None of the misstatements identified by us as a result of our audit procedures, incorrected by management, were material, either individually in the aggregate. No material irregularities or illegal acts were noted. No transactions entered into by the college that were that lacked authoritative guidance or consensus. No difficulties or disagreements arose during our engagement. We did not have any independence issues, and we did not identify consultations or requests for a second opinion. With that, if there's any questions for either Greg or myself, we would be glad to answer.
Okay, is that the end of your presentation?
Yes, sir.
Okay, good. Trustee Ayers Wilson, if you have any questions, please feel free to ask Greg, Matt, or the Lone Star staff.
No questions at this time.
Okay, thank you very much. Appreciate it, gentlemen. Jennifer, they work for you, so I'll leave it up to you whether or not to keep them around. It's your call. Okay, thank you. And we'll move on to the next agenda item, which is review audited financial statements presented by independent auditors. That's done. Next item is internal audit update, and that'll be by, yes, ma'am. Yes, ma'am. Forgive me. Trustee Ayers Wilson probably cannot hear you since you don't have a microphone. We're going to give her a microphone. Okay, there you go.
Or I can come up to the podium because I was intending to then provide my presentation as part of the prior agenda item,
Yes, ma'am. You bet. Feel free.
rather than moving on to the
Yes,
next
ma'am.
one
So
quite
we're
yet.
still on review audited financial statements presented by an independent auditors agenda item. Is that correct? Okay. My apologies. Thank you.
Thank you. Apologies that that was not clear on the agenda. Yes, for that same agenda item, the intent was for the external auditors to first do their presentation, and then I wanted to give a presentation as well, if I could. Part of the auditor's role, so it is Lone Star College, our team that puts together the annual financial report, and then the role of the auditors is to review that and be able to provide the opinion to the trustees if the report we are providing is accurate. And so that is what you just heard from Weaver. But with that context, I then also wanted to provide a presentation on what is actually in the financial reports themselves that we are presenting. Okay, so if I could please, the agenda here, I just wanted to go through the three main financial reports that are in. I know the full report itself is quite lengthy, over 100 pages long, but there are three key reports for anyone to look at if you really wanted to boil it down. In the report itself that has been provided, I'll mention page 34 is the statement of net position report. This is more commonly known as the balance sheet. And then page 36 is the statement of revenues, expenses, and changes in net position. This report is more commonly known as an income statement, or sometimes it's called a profit and loss statement. And then finally, the third key report, let's see here, that one is on page 39, is the statements of cash flows. So that is where I wanted to go through at a high level. What is the bottom line of these three primary financial reports that is in the full 100+ page report that's been provided? I do also want to note that we are designated as a special purpose government engaged in business type activities. This does drive a lot of things in terms of how we have to report things. So as a business type activity, there are significant portions of our financial reports that are done in a manner similar to a private business, even though there are also obviously other key aspects that I will point out that makes it clear that we are a government as well. So first, kind of going through the balance sheet and the income statement. Now, I mentioned these three key financial reports. They do all fit together like a puzzle. You should be able to mathematically walk from one to another and back. So the balance sheet is a snapshot in time of all of our assets and our liabilities. So when you look at that report on page 34, it'll give you where we ended last year, which is also where we started this year. So you can see where we started fiscal year 2021 and where we ended. Those are just two single snapshots in time. It is the income statement that then provides the information on the activity, revenues, and expenses that occurred over the entire time period from that beginning point to the ending point. So what we have here, sort of bottom line, is in our balance sheet, our net position, which is our assets minus our liabilities. We started the year, fiscal year 2021, at $222 million. Then in fiscal year 2021, so from September 1, 2020 through August 31st, 2021, our income statement, revenues minus expenses, had a net income of $31 million. So you can mathematically take that 222 million of where we started the year at, and our net income of 31 million brings you to where we ended this year with a net position of 253 million. So we did have a positive 31 million improvement to our bottom line balance sheet. Over on the side here, I did provide a history of where our net position has been. You see most years it's green. There's one year that is red in 2018. It's still positive. So the red, I didn't intend it to indicate it being negative, but I did that to indicate that's the only year in this history provided where our net position declined. And that year it was due to the first time we had to recognize the other post-employment benefits. So it is still a positive net position, but that year we did decline. In all other years of this history since 2015, each year we have improved our net position of our balance sheet. And again, please ask questions as I go. So on this slide, I wanted to just provide some additional detail on the income statement itself, because as I mentioned, this is the financial report that actually reports on the activity, revenues, and expenses that occurred between our starting and ending point. And so here you'll see operating revenues, operating expenses, and then non-operating revenues. For me, this is one of the key reports where it really highlights that we are a governmental entity, right? So operating revenues can primarily only counts tuition and fees. It does not include any form of taxes, property taxes, or even the state funding that we receive. Operating revenues in many ways reflects what would our revenues be if we were a private business, right? But then the operating expenses is all of our expenses. So that's why you would see, and you would expect to see this, we have an operating loss. We always have an operating loss. Our operating loss this year did decrease by 28 million. It went from negative 383 million to negative 355 million. But we're not a private business, right? We are a governmental entity intending to provide quality, low-cost education, and that is supported through taxpayers, through our property taxes, and our state appropriations. So both of those funding sources shows up in non-operating revenues. So that's where you see we had 386 million last year in non-operating revenues. So like I said, this report for me really shows where if someone wanted to know what would it look like if we were a private business, you can see that we have a negative operating loss. But since we're not a private business, since we are a government with the taxpayers and the state funds supporting our students, that's where you can also see that reflected here through the non-operating revenues. And then net income is the net result of all of that. So in 2021, this is where we had the $31 million net income. So our revenues did exceed expenses by 31 million. And that is an improvement from 2020, which was at 4 million. Again, on the side, I have provided the history of net income since 2015. And you can see 2015 was the last time that we had a negative net income. We have been positive since then. You can see last year was the low point, 2020 was the low point at 4 million up to 2021, 30.8 million in net income. So the net income statement, right? It is on an accrual basis. It does have expenses in it that are non-cash, right? It does include depreciation expense and includes estimated expenses related to the pensions to OPEB. So I do also want to share what change occurred in our cash. So same idea. The balance sheet again is just a snapshot in time from the beginning of the year to the end of the year. This time I'm taking just one component of the balance sheet. This is not the bottom line, but one component of it is the cash and cash equivalents. So here you can see we started the year out with 135 million. And on our cash flow statement, which is the cash activity that occurred during this time period, we had positive net cash flows of 175 million. So we ended the year with 310 million. Now here, the main driver, and I'll show it more actually on the next slide, is we issued bonds this past year, right? In 2014, the voters approved a $485 million bond referendum, authorizing us to issue up to 485 million. We don't go issue that all at once because of course it takes time to do the construction projects. So we issued that in 3 separate series. And you can actually see the effects of that in the history of our net cash flows that I have over on the side. Because when we issue those bonds, right, on our balance sheet in the liabilities of debt, our debt does go up when we issue those bonds. But then we also receive the cash from the bond proceeds. And that cash is what we use to spend to complete the construction projects. So in our cash over on the side here, you can see that in 2015, 2017, and 2021 are the 3 times that you see our net cash increase. And those are the years that we issued bonds. The first series was in 2017, the second one in 2017, and then our third and final series was in 2021. So that does align with those years in the history here. In the intervening years, our cash decreases. And again, this is to be expected because we issue those bonds and get that cash proceeds, not to sit on that cash, but to go build construction projects with that. So as those projects get built, the cash gets drawn down.
Ask you a question.
Yes, please.
So what does 2022 look like for you looking ahead?
So 2022, we should see, my expectation is that this cash will decrease. Our ending cash balance should go down because we should be spending that cash on the construction projects within their overall balance sheet that would then get converted into capital assets. Yes. So I would expect this pattern to continue where in years that we don't issue bonds, our total cash declines. I do want to mention here that again, here with the end of year financial statements, I am reporting here on all of our cash, right? Obviously, including mentioning this cash that is specifically for construction projects. Typically, when we separately review the budget or the monthly financial statements and I report on cash then, at those point in times, I am only reporting on our reserve funds, on our cash. That does not include these proceeds that go towards construction projects. So I do want to make that mention that this is all of our cash. So I think I shared most of actually what I wanted to highlight with this slide, going into a little bit more depth of the cash flow statement itself of the activity that occurred there. Again, really the big bottom line here is that issuance of the bonds this past year of 185 million. And that's where you can see when you look at the different components of cash flows, we have net cash used by operating activities, net cash used for non-operating activities, and then for financing activities and investment activities. So of these 4 components, you can see the difference from one year to the next is relatively small in most categories, except for the net cash used by financing activities. So that is really where you see that significant inflow of cash from the issuance of bonds is in the financing activities. And then whereas the prior slide history was showing the actual total cash and cash equivalents history, this one shows that same history, but the change from one year to the next. So that trend that I already mentioned of it being positive net cash flow in the years that we issue bonds and the negative cash flows in the intervening years as we spend that cash on construction projects. There we go. I was trying to get it to go to the next slide. So I've gone into some depth on the income statement and the cash flow statement. So finally, in closing, I just wanted to provide some additional depth as well onto the balance sheet itself and specifically components of our net position. So I showed initially that our net position did improve in 2021 from 222 million, ending at 253 million. We do have to break that net position down into different components, which includes net investment in capital assets, restricted net position, and then an unrestricted net position. So this is where you can see that the net investment in capital assets, there is a big decline here. And again, that is primarily driven by the issuance of the bonds. Because the net investment is our capital assets minus bonds outstanding. So when we have an increase in our bonds outstanding, this net investment in capital assets goes down. But it is all offset within the different components of net position. Again, here, the bottom line that I want to highlight is that our overall net position, it did improve by $31 million from 222 million to 253 million. And then finally, definitely want to take questions. But if I might, sorry. Apologies, I had left a couple of my notes over at the table. I do want to mention just a few things. One is that from the GFOA, we do receive the Certificate of Excellence in Financial Reporting. We have received it since 2004. For this current year, we have not received it yet because if you remember last year, we had the reissuance of the financial statements, so that delayed that submission. But I will say, I am still expecting that we will receive that again this year. And they have indicated to us that they hope to get that formal notification to us by the end of December. So there, hopefully, I'm not jinxing myself, but hopefully by the end of the month, I can report that we have officially received that again, as we have received it every year since 2004. We also, through the Government Treasurers Organization of Texas, received a certification of our investment policy, and that was for a 2-year period for 2019 and 2020. So that is a great accomplishment as well. And we have reapplied for the 2021 investment policy year. And we are AAA rated through Standard & Poor's. So those are 3 key things I do want to mention regarding our financial report. And then last but not least, I do need to give a huge thank you to the team here at Lone Star College that does really all the heavy lifting of putting this 100+ page report together. And that is Valerie Cott. She's our Associate Vice Chancellor over Financial Reporting and Operations. And then her team, Craig Price, Letitia Batiste, Gloria Boley, and Robin Riesbeck, they all put a lot of effort and work into putting together the financial statements. And a huge thank you from me to them.
Good, thank you, appreciate it.
Thank
Good
you.
presentation, and I'll now ask Trustee Ayers Wilson if she has any questions, and then I may have a couple after that.
No, I don't have any questions at this time. Jennifer, is this the one you sent earlier?
What I sent to you earlier was not this presentation, which I can still also send. What I sent earlier was the full financial report.
Okay,
itself.
can you send me this one too, please?
Absolutely, yes.
Thank
I
you.
will, after this, I will send all of the presentations from today.
All right, thanks.
Mhm.
Good, thank you. And mine was easy, just one, thanking you and your team. As you said, this is kind of fluid. The timing of this report and the end of the year and all the other things, the reporting date and deadline, state requirements makes it incredibly complex. So if you want to take a minute, if you haven't already, I may have drifted off here on distraction for a moment. If you didn't explain the difficulties and the timing, feel free, or if you don't want to, that's fine. You can do it at the board meeting.
Sure. No, just on the timeline. Yes. So we are required by law to submit our financial statements to several institutions with the state and federal level, our financial report by the end of December. Operationally, we do not internally complete the report until about the end of November. In this case, the report that I sent out this morning, we just finished yesterday. I mean, of course, there are just a couple loose ends from here that we complete. But the timing is just very tight with it. Of course, in December, we also want to bring the financial report to the full board. And our board policy asks us that we hold this committee meeting 1 week prior to that board meeting. So yes, always happy to present it to this committee and the full board in the month of December. It just is always a little bit of a timing challenge. So again, that's another reason for me to say thank you to Valerie and her team, because they definitely do a big push to get this all done in time for this committee meeting, and especially with the Thanksgiving break in between. It definitely is always kind of a crunch time for her team at this time of year.
Now, this is not an action item for the committee, right? Today is just a report.
Yeah.
So that was a question, now it's a statement. So this is just a presentation to the committee, and the board will vote on this at the December 9th meeting. It'll be an action item for the board.
I believe the meeting is it December 8th?
8th, I'm sorry.
Yes.
That's all. Yes, ma'am.
No,
you're
I know.
right. It's the
It got,
8th.
so everyone needs to,
Okay, so we can, as trustees, we can look for this to be on the agenda for,
Yes.
and you'll present at the board meeting,
yes.
same presentation. Okay,
Yes.
good. All right. And if there are any updates, you can give them then.
Mhm.
All right, very good. That satisfies my question. Trustee Ayers, before we move on, Ayers Wilson, excuse me, before we move on, any other comments or thoughts?
Not at this time. Thank you.
Okay, yes, ma'am. Thank you. Then
Thank
I'll
you.
move to the next agenda item. Jennifer, thank you again. Next agenda item is item number 7, internal audit update.
Let's start with some general information on the department itself, and then I'll move on to the updates on our fiscal year.
I'm sorry, I can barely hear.
Oh.
We're going to start over. Our
Let's
microphone
start
goes
over.
off.
All right, okay, so Letty Charbonneau, Executive Director of Audit and Consulting Services. And I'm gonna go ahead and start with some general information on the department, and then I'll move on to the updates on our fiscal year 2021 activities. So our mission is to provide independent objective assurance in consulting activities designed to add value and improve the college's operations. We strive to be a high-performing internal audit function that is viewed as a valued partner and trusted advisor. And to ensure that we comply with our professional requirements, we follow the Institute of Internal Auditors International Professional Practices Framework, which consists of the elements noted on this slide. And then again, feel free to jump in if you have any questions as we move through the slides. So the standards mandate that internal auditors be independent. So we accomplish that through audit and consulting services reporting directly to the chancellor. And then as far as our activity, we completed 11 projects under the fiscal year 2021 audit plan. We had 2 projects there at the bottom that we carried forward to this fiscal year, and both of those projects are in progress. As far as other activities, we monitored the implementation of management action plans. And as you'll see on this slide, we monitored total 42 management action plans, 38 of them were closed, and then we had 4 in progress as of 8/31. We also administer reports of suspected fraud incidents. So in fiscal year 21, we had a total of 39 reports coming in, and all of those were closed as of 8/31. And then just one minor thing here to add is, well, it's not really minor. In November, we conducted a short survey just to kind of assess the external auditor performance on this year's annual comprehensive financial report audit process. So just a 10-question survey sent to those who really interacted directly with the external auditors, and the anonymous responses all came back positive, satisfied with their performance. So, and I'm going to be sharing those results with everybody so that you could see the responses that came back. So, a lot of strongly agree and agreed responses came back from that survey. Really, that's the end of my presentation, but if you have any questions, happy to answer those at
Okay,
this
thank you.
time.
Thank you, Ms. Charbonneau. Appreciate it. Trustee Harris Wilson, do you have any questions for the internal auditor?
How many people were involved in the survey?
The survey went out to the 9 people who interact directly with the external auditors.
Okay, so just 9 people. Okay.
9 people. And then pretty much everybody responded. I think there was one person that's no longer with the college that, did get completed before they left. Any other questions?
None for me. Ms. Harris Wilson, you done?
Yes.
Okay, all right. Thank you very much. Ms. Harris Wilson, if you don't have any further business, anything you want to bring up, I'll adjourn the meeting, but I do want to give you a chance for any last comments, please.
No comments. It was a good meeting. Very informative. I just look forward to getting the paperwork or the presentations.
Okay, sounds good. And Ms. Mott, just as a reminder and make sure that we are able to provide Trustee Harris Wilson's what she had asked for. She had wanted a copy of the Weaver presentation. So who will send that, you or you? Okay, so, okay. Okay. All righty, sounds good. I think we're all covered then. This meeting's now adjourned.